Okay, so this 170 point crude oil trade is still active. Our members have taken profits at both of those blue lines. Now, what I want to cover in this video for you are the major zones for crude oil, where crude oil might be going, and also give you some value entries as we also entertain the possible gaps that could happen with crude oil. Are you ready? Let's go. Okay, so this is the major headline of the weekend that OPEC Plus stuns the market with larger than expected output hike. That means the crude oil markets took a fresh hit over the weekend when OPEC Plus stunned traders by announcing a larger than expected output increase for June. This happened in a virtual meeting on Saturday with key producers led by Saudi Arabia and Russia agreed to raise collective output by 411,000 barrels per day, nearly triple the volume originally scheduled. Okay, so this means, according to this article and from what we're reading, that there is going to be an overabundance of oil being produced. So if you think about supply and demand, right, there is going to be a lot of supply in the market, which leads me to think that crude oil prices, okay, has the possibility of continuing to drop in price. But we're going to go ahead and get into the technical analysis. Okay, so this is the current trade that we took, as I mentioned. We started selling inside of our trading club at about 59.50-ish or so. And we've gone down and again, taken profits. And if you are still riding this short position here, again, hopefully you would have cashed out before the weekend. But if you're still riding the short position, again, a very tight leash. And I would definitely not give back too much profits. We were seeing and trying to see if we can get all the way back down to this wick at 56, which is going to be pretty feasible this week coming up. So let's go ahead and get rid of the charts and let's go ahead and start on the weekly candle. Okay, so this was the weekly candle. And you can see here on the weekly that we crossed below the 200-day moving average. We came back up to a nice Fibonacci area. And let's put that right in here. Okay, we rejected the 61.8. Okay, and then we continue to the downside with crude oil. So what I'm planning to do, and let me ask you, the audience, I'm going to do an entire video series on trading from the weekly candle. For a lot of members, because they work full-time jobs and kids and family, they want to just swing trade from a higher level. So if you want to see me do a series on trading from the weekly time frame using the moving averages and the parabolic SAR, head down below to the comments and type in weekly, and then I'll put together a first couple of video series for you so you can feel comfortable trading long term versus taking 100 trades. You might only lead one trade and you just let it ride. So if you want a weekly training on videos, drop that below weekly in the comment and I'll do that for you. Okay, so we saw that rejection at the 61.8. Okay, so when this happens, we always look for the next floor, which is the 100, or I'm sorry, in this case, the 0% Fibonacci line. Okay, we are going to come back on a smaller time frame and take a look at any possible liquidity that still might be sitting on this wick, because this was an abrupt move up from this 54.60 area. So now you have an idea about what's going on the weekly time frame. So keeping this in mind, I'll go ahead and close up that arrow, and then we're going to move over to the daily. Okay, so we can see here as we move into the daily, right? That was the rejection, okay, that we got. But we can see right here that this area right here is going to be super, super important for structure. Okay, so let me get rid of the magnifying glass. We can see here that the bodies of the candle have not closed below this level. And I'm just going to put it here as a white line to give you that 57.70. For those of you that might be watching this on a small device, I'll do my best to call out price. Okay, so we put what I call an anchor there, which is 57.70. Okay, so we can't expect 56, 54, 53, until we get a daily candle, okay, to close below, and I'll keep it consistent. Let's make this red, below 57.70. So that is clue number one. If we are going to go lower, we are going to have a candle close right around below 57.70ish or so. And so the question I get all the time is, what time frame of a candle should I be looking for to validate that possible sell back down to 56 or 55? In my personal opinion, I like to use the 8-hour candle. If you see an 8-hour candle closing below 57.70, what you're probably going to see is a small pullback on a smaller time frame, and then you'll see the drop continue to happen. So that's number one. For those of you thinking longer term, this has to happen, okay, if we're going to go further lower, okay? In the meantime, this has been a nice base right here at 57.70. So for those of you that might be thinking long, I would be very cautious, okay? Based on the fundamentals of crude oil and things of that nature right now, it seems like the bias is going to be staying short, but there are going to be times where the market is going to pull back, of course. So if we look here now at the 8-hour where price closed, you can see here what I was just talking about, okay? We had an 8-hour candle close below 57.70, and then price came down to the next level. But if you take that over here, you can see here, we never had price close below this base. So price wicked, came back up, trapped some sellers, and then price took off to the upside. So now we closed with kind of a doji candle to the bottom of this candle here. And I'm going to go ahead and make this a little bit bigger. Okay. So this leads me to believe that we could see now price eventually come back down into this area. Okay. So if you are going to try to scalp a buy in this area, your stop loss has to be the bottom of this yellow box. Because if they do close, right, or maybe this price action here would be too much for you to handle, then you close if you're trying to take a bounce off of a buy here. Now, keep in mind, as I drop down to the 4-hour time frame, okay, keep in mind that we are still trading below the 200 moving average. Okay, so you should only be looking for shorts opportunities in this particular case. Okay, I am not looking to buy crude oil. I'm looking for the next pivot point to sell crude oil again, which I'll talk about in just a minute, which is going to be around 61 if we get that high. Okay, so we are looking for break of structure. Now, keep in mind that with this news that came out over the weekend, we could possibly see a pretty large gap in the market when the market opens at 6 p.m. Eastern Standard Time. If you don't know what the gap is, if you've never traded gap entries and you want to learn more and you want to join us live tonight at 6 p.m. Eastern Standard Time, you can go up to my website, join us, and we'll be there live tonight at 6 o'clock in our private app, trading all the different gaps across the board with indices, gold, silver, and everything else. All right? Hey, by the way, if you're getting value in this video, hit the like button for me. It's free. Why not? And if you haven't yet joined our YouTube channel, because I'm losing my voice, hit the subscribe button and make sure you turn on all notifications for you. Okay, so as we are looking at here, again, for those of you that do not know what the gap is, it means that price could open higher than where it closed on Friday, or it can open up lower than where price opened on Friday. And this space in the market would be considered the gap. So we have to look out for that right now. So for those of you watching, these are going to be your main pivot points, and I'll call them out here real quickly. To the bottom, it's 55. To the top here, it's 57.70. The next major pivot point is 61 even, and then we got 63 even. So this is our current playing field as we look at the 1-hour chart, okay? So we are still waiting for confirmation of a close to get price to come back down again. If you're looking to take a bounce from this level, then your long position If you're going to try to take a long from here back up to this high, your exit has to be right here. Okay, so it's a very nice risk to reward if you can get some points coming back up. Now, I do see that they left some unmet liquidity down here, which I think they are also going to come back to grab. But if you want to try a long position, this would be the best opportunity to do a long position. And on a short position, if they do break this particular level, you'd want to come here to this high, and the goal is to take it all the way back down to 55. So you got a couple different scenarios that you can start to week with regards to trading crude oil. Okay, thanks for watching. Don't forget to share this video with your trading community or people that you know who may want to get involved with trading. Let's help them out make some smarter decisions. Have a fantastic trading week, and may God bless you and your families.